Very good afternoon to you. Asian stocks traded mixed. Technology shares were said to be treading water as investors assessed a mixed earnings report from tech giant Nvidia Corporation. Barring tech, regional markets were fairly positive, taking their cues from Wall Street, where the S&P 500 inched up to a record high. The Nikkei share average rose by 0.73%. The Hang Seng Index declined by 0.8%, while the Shanghai Composite Index rose by 1.41%. US markets ended yesterday's session higher, this as investors digested Nvidia's quarterly earnings results. The Dow Jones Industrial Average rose by 0.3%. The S&P 500 edged up 0.2%, while the Nasdaq Composite Index was also up by the same margin at 21,590 index points. Looking at local indicators, we see that the all-share index is currently down 0.1% at 101,939 index points. Looking at the local currency, we see that the rand is trading at 17.68 against the US dollar, 20.62 vis-a-vis the euro, and 23.90 against the British pound. On the commodity front, we see that gold is trading at $3,395 an ounce, platinum at $1,348 an ounce, while Brent crude oil is standing at around $67.17 a barrel. All right, let's get into it now with Simpiwe Letlojane. He's an investment strategist at ABSA. Thank you so much for joining us, Simpiwe. So markets appear generally to be up, with the US still hitting records. What are some of the drivers that you've been witnessing this week?
Yeah, I think, look, largely we're seeing a lot of resilience from markets, and really the main driver for this is earnings have been fairly resilient if we're looking at the most recent earnings season. Of course, also just from a tariff perspective, there's been quite a lot of uncertainty dissipation where, there's not as much noise coming through from that front. Of course, in terms of the tariff impact, it's still yet to play out in full, and certainly we'll be monitoring that, but earnings have been fairly positive. And then, of course, markets are beginning to turn their attention to the September interest rate decision by the US Fed, expecting that they will possibly cut interest rates there by 25 basis points, which will spark a bit of a cutting cycle after the pause that they've been taking for the prior couple of months.
So market players were waiting for the Nvidia results to come out yesterday. People have described them as mixed. What's your assessment, and what does it suggest in terms of the AI development theme?
I think very strong results from Nvidia. I mean, we're seeing a company growing earnings by in excess of 50%, and they've done so for the past couple of quarters. So still really showing quite a lot of earnings and revenue momentum. But of course, a share like that is trading at fairly expensive valuations does command quite a bit of high expectations from markets. So even though it's growing highly, it is what markets are anticipating, and any sort of misses that you can tend to see, even though we didn't see any miss from a top line, bottom line, overall company perspective, there were some misses if you're looking at some of the underlying business units. And then, of course, some of the other concerns just around the outlook, specifically around, US-China relations and how that will affect exports to China. But still seeing quite a lot of momentum within the AI sector, within the semiconductors, in terms of the growth figures that we're seeing.
The gold price is still looking fairly strong. Is this a product of a weaker US dollar, or still, continued uncertainty around global economic dynamics?
Yeah, certainly the gold is benefiting from that US dollar weakness, as particularly if you're looking at the US dollar as well as gold. Those are typically your safe haven assets, with a lot of the risks around US policy. So a lot of the uncertainties that we're seeing globally are actually stemming from the US, so that tending to benefit the gold from that perspective. But what we've also seen is quite a strong underpin of central bank buying up of gold, particularly the likes of China, as they look to essentially decentralize their reserves away from the dollar and have a bit of gold reserves, just given all of the uncertainty that we're seeing globally.
I saw an article yesterday indicating that Capitec has now overtaken FNB as the most valuable bank by market capitalization on the JSE, with its market cap now standing at around 424 billion rand. But is it not an expensive stock, relatively speaking?
Definitely is amongst the most expensive banks, not only just locally, but if in fact globally, in terms of the PE ratio that it's currently trading at. But of course, this is quite justified given the growth profile of the company. So you're consistently seeing growth in excess of 20% from this counter, and that's justifying a bit some of those valuations that we are seeing from the counter. And what is also quite important is that they've gathered up quite a strong consumer base. So they have in excess of 20 million customers within the South African market. And that really gives them quite a lot of opportunity from a growth perspective, where there's quite a lot of opportunity sets. And what we have seen is them moving away from just being a bank, but being a broader financial services company, starting to sell the likes of life insurance. And in fact, even going beyond just financial services with some communication services offerings as well. And all of this stemming from the fact that they have quite a large consumer base, which allows them to have quite a lot of growth levers, which is what's justifying those valuations we're seeing from the counter.
And I see that they also have investment overseas as well, because before they were a strictly South African bank.
100%. So also looking to pursue some, expansion into other markets as well. So they made an acquisition, earlier, where they essentially bought up a operation within the European markets that also gives them further leverage for further growth potential as well.
Well, we'll be watching that space. Thank you so much, Simpiwe, for your time and insights. As always, that was Simpiwe Letlojane. He's an investment strategist at ABSA.